Hello, everybody, and welcome to the weekend edition of the Investor Community Market Briefing for Sunday, July 17th. We'll just quickly go through our disclaimer really quick before we go any further. Everything we do here is for educational purposes only. We are not investment advisors and do not provide investment advice. All statements made here are my own personal opinions and not to be considered advice to buy or sell any security. All trading and investment decisions are your own and done at your own risk. All right, we got that out of the way. What's coming up this week? Okay, we have the actually the beginning of the week. It's all about housing and home sales and whatnot, real estate. So yeah, that'll be interesting, and it'll be interesting for perhaps some of the home builders that are kind of setting up. Well, we'll see that in a little bit when we look at some of the setups. But just be aware of this. We've got a lot of macro that will affect those home builders coming up early in the week. So we start on Monday with the NAHB Housing Market Index. On Tuesday we have building permits and housing starts. Now in the building permits, there's some commercial in that as well. Housing starts are basically homes. On Wednesday in Canada we have CPI. That will be closely watched here. And our CPI numbers have been coming in really hot lately as well, even hotter than down in the US, I think, on a month-on-month basis. And this one's expected to be quite hot. Now, if this surprises a lot to the upside, it could affect US markets. US markets do tend to watch this sort of stuff that goes on in Canada a little bit. And I think that a really hot number in Canada could stoke fears that there'll be, another hot number down in the U.S. So that's something we should probably keep an eye on, even if you're American and you don't care what happens in Canada, you should a little bit. Sometimes these things affect what's going on down there and in U.S. markets. Also on Wednesday, in the United States, we have existing home sales. On Thursday, we have the Philly Fed Manufacturing Index. This is, another indicator of inflation in the economy. And of course, on Thursday, like every Thursday, we have unemployment claims. On Friday, we have flash services and manufacturing PMIs. Again, more inflationary type data, or data that gives us a view to inflation. I'm not saying it's coming in inflationary, but we'll be watching these for clues about inflation. We have a much bigger week than we've had for a while for earnings. Lots and lots of stuff going on in the earnings department this week. Lots of big names this week. So we start off Monday morning with more banks. They are the official start to earnings season. So on Monday morning we got Bank of America, Goldman Sachs, Charles Schwab. After the close, we have IBM. I'm not sure if anybody watches IBM anymore. Is IBM still important? I guess, a little bit. The rest of the names here, Monday after the close, not terribly important. On Tuesday before the open, J&J, probably fairly close, big Staples name, right? Halliburton, oil services provider, big in the oil industry. This will be interesting, I think, because obviously there's been a lot going on with energy lately. And I think that Halliburton's going to give us some clues as to what's up and what may be coming. Their guidance, I think, will be really interesting to either read through or listen to. Lockheed Martin on Tuesday before the open as well. So it'll be interesting to see what they have to say about their guidance. Do they, are they going to predict that the war in Ukraine continues? Because I'm sure they're making some money off of it. On Tuesday after the close, we have Netflix. So that will be very closely watched. Some other sort of second-tier names in here, but Netflix is the big one on Tuesday after the close. On Wednesday before the open, ASML. These are the guys who make the machines that make the chips, the semiconductors. Abbott, the pharma company, and Baker Hughes, another oil services company, all on Wednesday before the open. After the close on Wednesday, the big one, Tesla, So of course we very closely watched. We have another airline. I think we had an airline last week, but this is the first of the airlines this week. So we've got that Wednesday after the close. Alcoa, the big aluminum company. We've seen commodities have been coming down a lot lately. All of the industrial metals, and aluminum is certainly one of those. If they guide down, that could or would be negative for the economy. So yeah, even if you're not in this one, you might want to pay attention to their guidance. CSX is a railroad. And that's a key indicator for the economy. If you follow Dow theory at all, you know that if railroads are going down, the market is probably going down. Thursday before the open, we have AT&T. We have American Airlines in there, Nokia. I don't know if anybody remembers them. They used to make wicked little flip phones way back in the day. But nobody wants one of those anymore. Dr. Horton, a home builder, and Domino's. They put Domino's really far down the list here. That's interesting because Domino's used to be really closely watched. Snap, I did not highlight that. That's their logo. Samuel Adams, fun beer company right there. What else we got? I guess Capital One gets watched a little bit. On Friday, I don't know if anybody really cares about Verizon anymore, but we do have American Express. We also have Schlumberger, another oil services company. But we've probably heard enough between Halliburton and Baker Hughes. We will have heard enough about that sector of the business. The Schlumberger is probably going to be no big surprise, right? Twitter, I should have highlighted this, but I'm not sure if anybody actually cares about Twitter's earnings, because the whole Elon saga is really what's important for Twitter. I don't know if their earnings matter anymore until that's resolved. So there you go. Big week for earnings, and the week after will be even bigger. So lots going on. Exciting. Okay, let's dig into the markets now. Of course, we'll look at the major indices, we'll look at important commodities, we'll look at some sectors, and we'll see if there's any setups. And spoiler alert, there are some decent setups. We're starting to see more and more setups, kind of like we were last week. Now, a number of the setups we were looking at last week failed. We were expecting breakouts to the upside, and we got breakouts to the downside. It was a down week in the market. And we had a lot of really important macro data. We had that hot CPI print. We had a PPI print the following day. Kind of came in a little mixed, but on Friday, we turned it right around. So why don't we look at a chart here? So I've got the chart of the SPY. You can see, we're still in the downtrend, and we've got a lot going on in here. Let's just zoom into the more recent past here. Okay, so. Yeah, you can see that we spent most of the week coming down, but we had green shoots, and now on the CPI print, that's this day right here. This is Wednesday right here. So on that day, we gapped down a lot, and we popped right back up, closed that gap, and finished in the top third or so of the range of the day. I mean, that was a really strong finish. Now, the following day, Thursday, we gapped down again and came down and tested lower. We tested these lows over here. It looked a little scary when we were down in there, because if you break down and don't retake these lows and start staying down in this area, well, then you're looking at this low over here and continuing down into new lows, which I'm sure none of us want to see. But we recovered really nicely on Thursday. This is a really nice reversal candle here. And then we gapped up on Friday and went a little higher and closed basically on the highs. Now we've left a bit of a gap there. I'm okay with that. I'm not one of these people that says all gaps must be closed. So I'm not too concerned with that. I'm a little more concerned with some of the stuff that's going on overhead. So we have a slight downward channel here. You could call this a ginormous bull flag. I just think it's a slightly downward sloping channel. as we move up a little higher, but this whole area has formed a really nice space. What we're not sure about is, does the space need to go on for longer? Do we need to stay in this space for a month or two? Nobody knows. But what we've got coming up is a little bit of resistance here, but there's only 2 points on this line, right? There's really no confirmation on this downward channel. We do, however, have a trend line that has held price back a couple of times. That's overhead, and this declining 50-day moving average is just overhead as well, plus that unfilled gap. So we've got the gap resistance, this downtrend line, the 50-day moving average. I think it's going to be really hard to get through that the first time. I think it's going to need to either spend some time in there, or I don't want to see this happen, but it's quite possible we go up here and then we roll back over. And do we test there? Do we come down here? Do we keep going lower? If we fail, now if we did come up here right to this gap fill, well, that would be a higher high. If we failed hard after that, that would be bad. I'm more in the camp. I don't want to call the bottom is in, but I'm leaning towards the bottom is in this market now. And I'm more in the camp that something like this happens, that we come up in here, and the day after, we come in here, and then we just wiggle back and forth in here for a little bit, and then we break out. And then we maybe do the same thing up here, or we've got another big test up here. But I'm not sure if we'll break through. I don't think we're going to break through this week. I think it needs to spend time in here going a little sideways. Everything in here has been kind of tentative, right? So it would be healthy for just to take its time, and then the week after maybe make the big move. But let's allow it some time in here and give it a little bit of room to breathe. What else? So that's the SPY. The Qs. Qs are slightly different looking price action here. We've got this triangle or pennant that is formed here, and normally, this pennant in a downtrend would be expected to. It would be a continuation pattern, meaning we would be going down from here. So this one, I really want to see. Really want to see this break out to the upside. But again, look at all this resistance. We've got this, unfilled or partially filled gap overhead. We've got that 50-day moving average. We've got that psychological 300 level, which is major resistance. So it's going to be a tough go to get through here, and I really don't think it's going to go on the first time. And I think if it does, if this has a big day and tries to get through here in one big push, I think it fails for sure. So let's take our time. Maybe it takes a couple days to get up here, another couple of sideways days, and then pushes through. Very similar. I'd like to see similar action to what I just described on the SPY. Of course, I don't always get what I want. The Russell. Now remember, what was it, 2 weeks ago now, I drew this. I said, we may be getting a rounding bottoming pattern here. And that was 2 weeks ago. I have not adjusted this line at all. And look how well it behaved off that line I drew. Nice reversal candle right off of that line. Another beautiful looking candle the next day. So small caps are behaving nicely here. It did pause. We closed right at the 21-day moving average, and also that gap. Now I should probably actually almost delete this gap. This gap is almost filled now. But again, much like the other indices, we've still got plenty of resistance overhead. We've got the 50-day moving average here. We've got another gap. So yeah, we're okay with this taking its time. And grinding up here, or coming up into the resistance and then going sideways a bit and then going through. That would be perfectly fine and healthy. Microcaps. Microcaps. This is interesting because they've put in a slightly higher high, You know, they had a double, maybe even triple bottom here. Come up, put in a slightly higher high than that high right there. Have come down and they're coming back up again. You know, if we can come up and make another higher high in here, this would make this a lower low. That would, you know, confirm we're in a short-term uptrend. That would be really nice to see out of the microcaps. Again, like everything else, you know, there's resistance overhead. Volatility index is doing exactly what we want to see it do. Big move down on Friday after some, you know, movement, mostly sideways movement. And even, you know, on Wednesday when we gapped down as much as we did on that hot CPI print, it really didn't shoot up that much, and it got right up to that previous resistance level and rolled right back over and continued down. Now we are right into the 200-day moving average and also a pivot level here. So we do not, if we want the market to go up, we do not want to see this acting as support. It'd be nice to see this break through. 10-year yield. This is looking better for us as well. So you can see that week before last we were talking about how the, or last weekend, sorry, we were talking about how the 10-year yield had shot up quite sharply. And you know, we were not happy about that. You know, the market is going to have, equities are going to have a hard time going up when the 10-year yield is shooting up like that. And then it started to roll this week, roll over a little bit, kind of sideways to down action here. You know, there's a little bit of support here, but there's also resistance from this downtrend line and the 21-day moving average and the 50-day moving average overhead. So it would be nice to see this break down through this, you know, this nascent support area. And then maybe come down, you know, for a test of this 270. But yeah, it was nice that it popped its head above 3 shortly, and you know, every time it got up there, it got sold, or I guess actually more accurately, bonds got sold, or sorry, bonds got bought. Yields come down when bonds get bought. So that's good to see. That's good for equities. We definitely want to see weakness in here. We want to see this stay below 3. The dollar index. Let's bring up our trading view. So this dollar index, I've got a chart going back now to the beginning of 2021. I wanted to show you just the acceleration of the uptrend in this dollar index. Now this is not terribly great for equities. It's definitely not good for commodities, and it's not good for emerging markets, any of the emerging market economies. So we'll just zoom in a little bit. You can see, you know, we had this smooth uptrend that's easier for the market to deal with. And then it started to accelerate upwards a little bit, accelerated some more and some more and some more. You know, to the point now where, I mean, this is almost going vertical. The good thing about this is unsustainable. It cannot continue going up at this rate. And it looks like on Friday, it started to roll over. Now, we'd really like to see this, you know, continue to roll over. It's I guess we could almost put this one here. I like it there. You know, we really need to see another down day in this, see continuation. It wouldn't surprise me at all if this came all the way down to this trend line, but that for the first test for this dollar index is the 21-day moving average here. But any pullback in this is good. Pullback in here is good for equities, it's good for emerging markets, and it's probably good for commodities. You know, but if we're scared of inflation, you know, we're pretty happy with the downturn in commodities we've been seeing. So we don't want to see this go up too much. Let's take a look at our dollar cost averaging system. So this is on the SPY. We're looking at a weekly chart here. And you can see the MACD is bottoming out here. The MACD line is the blue line. The orange line is the signal line. And we're about to turn up, or it looks like we're trying to turn up maybe. We've have been going sideways a little bit. Now, some people may call this a bear flag, you know, and it'd be hard to argue with them on that. But we have a nice reversal candle on the week here. Should have actually showed you this on the SPY chart, but this is, you know, this is a SPY chart here as well. This is a weekly reversal candle. Volume has been a little light, but we had higher volume this week on this reversal candle than the week before. So, yeah, we can, you know, this hammer is looking good here. However, it's going to be, you know, we're going to need to get up to the 200-day moving average here and through, or sorry, this is the 40-week moving average. We're going to have to get up through this and get this MACD moving up before any of this turns green. Now the Qs are a little closer to doing that. You can see that the NASDAQ has the MACD line on the NASDAQ has already turned up. It's about to cross over, and you can see that the MACD histogram is about to go above zero. These are all good signs. This is, you know, this is starting to look bullish. We have a nice hammer candle, nice hammer reversal candle on good volume right in here. And that 40-week moving average overhead is a little closer. So this is good. This the Qs are probably going to turn green ahead of the SPY. And finally, the IWM. Much the same going on here, and this one is even closer to crossing up above the signal line. Yeah, this is all really nice to see, and this is one of the reasons that I am leaning towards the bottom of this market is in. Now that could change, you know, it's not going to take much for things to roll back over again. So let's not all get super bullish, but let's, you know, look for opportunities where there are, and I think that the opportunities right now are to the upside. Okay, let's go back over here and look at some of our commodities. Gold continues down. Now, if gold is a hedge against inflation, either it's not a hedge against inflation anymore, or gold bugs are not afraid of inflation. You know, look at them. I mean, we could just keep breaking through levels on this. We are coming into a really strong support level, though, this 1680 level. If that breaks, where do we go to? I don't know, maybe down to, yeah, I mean, down to 1600 is really the next stop if we break that 1680 level. The gold miners are looking no better. In fact, they're probably looking worse, suggesting that gold will continue to move down. Now, if we look at a longer term picture on this, just zoom out a little bit, you can see that we've crashed through really important support. I'm not sure where the next support on this is. Maybe down here around 23-ish, perhaps. Yeah, I should probably get that line in there. Somewhere around there. Yeah, about 23. For the so this is the gold miners. Now, we have two consecutive reversal candles here. So that is somewhat bullish, although the second one of these does not look as good as the first. And, you know, the first one had really good volume, the second one, not so much. I'm leaning towards this is going to fail to get through this resistance and roll over and take gold with it. Silver it's got whacked really hard. It continues to just fall apart. You can see we've broken through another important level. It did have a bit of a reversal on Friday, though, looking better than gold was on Friday. So that's interesting to see. But you know, this is a bear flag here. We could measure this. We can measure this probably from up here. So what is that? That's about $2.50. So yeah, we should be seeing another $2.50 down from this, so down to around 1650 is where that measures out to. And you can see, so if that measures out 1650, we've got major support from the past right in around that area. Got that in around 1668. So I think there's more downside in silver. I think there's a test of this major support coming for silver. Copper, another really important metal for the economy. People love using copper as a benchmark or a proxy for the economy, and you can see that that has just been breaking down as well, coming into this really important $3 support level. We got a consolation price just below that at around 284. Really super minor support maybe off of where it seems to possibly be finding support off of these little levels in here. I think I should probably draw that in. Comes down just a little bit, something like that. Okay, let's zoom in a little bit here and see how that. Yeah, I mean that's worked fairly well off of that level so far. So that's encouraging for copper, and we would like to see copper bottom out here and start moving up, because that would be good news for, or that's telling us that commodity traders are seeing more positive signs for the economy. But right now, I mean, all signs, copper is basically pointing to a recession. That's why we don't want to see this coming down as hard as it has been. DBC, the overall commodities index ETF. Some, finally slightly bullish signs in here. It is still finding support. I think last week we would have talked about how it found support at this trend line and just above the 200-day moving average. Well, this week it came down through that trend line, touched the 200-day moving average, and then bounced, put in a nice reversal candle there. Obviously we need to see this reversal continue. It's okay if it goes up until this gap area here and goes sideways for a bit and just consolidates itself. Much like, we've been looking at the indices and most of the sectors needed to consolidate, go sideways for a bit. I think we need to see that in commodities. Some more sideways action for a while. DBA, the agricultural commodities. This is still finding support at this level here. Not as strong a reversal as we saw in the overall commodities. Tough call. I don't know. Flip a coin here. We could easily see more downside in this. I think the big decision is, does 19 support if it comes down there? What else? Oil. Okay, so crude oil is now at this long-term uptrend. We broke through it very briefly, put in a nice reversal candle, and had a weak follow through the following day on Friday. Again, like the other commodities, I think this needs to go sideways. Maybe it could grind up along the along this trend line, and we've also got the 200-day moving average there. If this breaks through here and breaks through the 200-day moving average, there could be quite a bit more downside in oil. Maybe down to 85, possibly even down to 80. But I don't think this is turning and going back up anytime soon. This needs some more sideways action. That being said, long term, in the very long term, I am very bullish on oil, and I want to get back in here, but I don't think it's ready yet. XLRE, the oil companies ETF, and you can see that that is, this is a very steep downtrend line we have here, and it looks like, it is trying to break it a little bit. It's not behaving, terribly well as crude was on its 200-day moving average, but we had a little bit of support. We would have expected a little bit of support from this price action over here. And sure enough, we got that, and we had a nice reversal, and then another half decent candle on Friday. Again, with this one, I think we see this go sideways for a bit. XOP, oil exploration and production. Again, chopping around, perhaps a double bottom. This is the first sign of a bottom forming, but I still think, these things could easily just roll over and go down. Oil services. Remember, we've got, we saw this earlier, we've got a lot of these oil services companies reporting this week. That's going to be what's driving this ETF, OIH. That's what's going to be driving this week. But you can see, you know, we bounced where it should have. Put in a nice reversal here. If this is going to move higher, it needs to continue, right? But again, I think maybe we move up a bit, go sideways. But the caveat being there is we've got all these earnings, so you know anything could happen, right? XLY, consumer discretionary. Another one that behaved nicely off the line that I had drawn, or you know, off this sort of rounding bottom pattern that I was expecting to see. Gotta love it when that works out like that. So yeah, so you know, it's continuing to move up. We have nice reversal on that CPI day, but we've got resistance overhead. You know, we've got you know a series of highs here. We've got that 50-day moving average. We've got this gap. Be interesting to see how this reacts up in this area with this resistance. I'll be watching that closely. Industrials is still messy. Just chopping around, lots of wicks. It's just, it makes it really difficult to get a read on what's happening when there's big wicks like this. So, you know, generally when the wicks are below the body of the candle, that's good, right? That's buying. It means it came down and they bought it. It came down, they bought it. When the wicks are above, that's bad. That's bearish. It went up, they sold it. It went up, they sold it. So when you see this kind of price action, how do you know, it's like, okay, yeah, the bears are there sometimes, the bulls are there sometimes. Who's winning? It's really hard to say. So yeah, this is a space I just don't want to be in right now until it makes up its mind which way it wants to go. Northrop Grumman is one that we have been watching. You know, we've been looking for a breakout up here, and it just wasn't happening, and it seems like we're failing. But we come right down to this 100-day moving average, you know, just below this trend line, and, you know, we put in a couple of reversal candles. Lots of volume on Friday's candle, and that's, you know, that's a hammer candle, right? It's a hammer candle in a downtrend. So this is short-term bullish right here. I don't want to play this just, you know, from what we saw on the sector chart just now with the mess that it's in. Normally I would want to play this. Normally I'd be quite bullish about this, but I just don't know. The sector is messy, and it's, you know, it's aerospace and defense, and you know what happens if peace breaks out. You know, this thing is rolling over, probably coming down to the 200-day moving average. So it's a bit of a coin flip for me to be playing that one. Financials. So the earnings season financials got off to a rocky start, as you can see on the chart here, with this giant gap down on Thursday. But it reversed, and we followed through really strongly on Friday. So that's really nice to see. That being said, actually I need to draw in another little piece of line here. So we've got a bit of a pennant here, right? There's lots of resistance overhead. 21-day moving average right there. You know, this little bit of a brand new trend line. We've got some resistance here. We've got the 50-day moving average. We've got the gap resistance. So looking like a lot of charts we've been looking at, right, with a lot of resistance overhead. But, you know, a nice strong reversal there. Technology. This is going to look very much like the QQQ chart, of course, and it's got that same kind of pennant action going on with some resistance overhead. Nice price action here in the last few days, though. Good, strong reversal. And let's just, you know, hope we see a little more follow through, or take a break, go sideways, but don't come down. Going sideways and then moving up, that'd be fine. Communications sector. And this one will look more like the SPY chart. Really nice base. Looks like it kind of wants to be in this base a little longer, though. You know, we do have resistance overhead, and you know what? We're fine with this, spending some time in this base. Or perhaps if we were to come up here and, you know, put a little consolidation right up in there and then break out of that. That is some price action that I would like to see. That's that's a breakout that I could definitely see myself buying, with some sideways action in here first. So let's see what happens there. Apple's been quite strong after this, after this pullback. I mean, we now have what we've been looking for in the indices and a lot of individual stocks, right? We have a low, and then we got a high, and then we got a higher low, and now we've got a higher high. Perhaps you could call this a higher low. I think this is all sort of the same thing. It's a bit of a consolidation, maybe even a broadening pattern in there. But now we're breaking out to the upside of that. One more day, we can get above this here, and let's just draw that as a pivot level, because that might come back and haunt us. So we should just we should get this drawn in right here. Okay, so if we can get above this pivot right here, and make a move into this 157-ish area where the 100-day moving average is and the 200-day moving average is. Maybe go sideways in there for a little bit before moving higher. But this is a healthy looking chart, and even kind of almost a V bottom in here. So yeah, I like what I'm seeing in Apple. Amazon's kind of, remember last week I mentioned, I talked about these two candles right here and how you could play a break out of that. Nothing really happened there. This is one of the ones that broke to the downside. But it's moving back up, and it's had a couple nice reversal candles and decent volume, really good volume on Friday, decent volume on that Wednesday reversal as well. So not behaving as well as we'd like it to, but it's not looking really unhealthy either. Just all part of a bottoming process. Meta, this one continues to underperform. Still building a big base, but this has the look as it's going to be in its base for a while. Netflix, kind of the same thing on Netflix, right? Really nice base. It's been in this base for quite a while now. So when did it get in here? So this base started around the end of April, beginning of May. So what are we now? 2.5 months into that? I think that what we need to see, I'm gonna sound like a broken record here, right? But we want to see some consolidation up here at resistance, go sideways, then break out and start attacking some of this. Start attacking this big gap. I don't know. I'm not sure if this is playable here. I guess it's a 15% move from here to the bottom of the gap. You could play that. But I think the bottom of this gap is going to be resistance for sure. It's got to go up here. It's either going to roll over, or it's going to chop around and go sideways. Ideally, go sideways again, and then go attack the gap. But yeah, if this doesn't just go sideways in here a little bit, I think it probably rolls over, then spends more time going sideways. Google's kind of messy. I'm not sure why, yeah, there's nothing to do here. It's consolidating. It's messy. Maybe you could play it in this consolidation. If it comes back down here again, maybe you could buy it with a super tight stop, thinking that it's going to go up again. It is, we are making slightly higher lows here, but we're not really making any higher highs. So yeah, if you like mean reversion type plays, there could definitely be a play in here for you. Tesla, this one's coiling up a little bit. Remember, they've got earnings later in the week, right? What was it, Wednesday or Thursday? Yeah, this is sort of tightening up in this bear flag, and trying to break out of there, but didn't. Tried again on Friday maybe. Obviously, the big thing is earnings, though, and whatever happens before then, I think is irrelevant. Earnings are the big event. Semiconductors, looking somewhat constructive. You could say that they've put in this is a very minor high right here, right? But you could say that they've put in a minor high. You could say they've broken out of this little consolidation nicely, so this is good. You know, 3 days of really nice price action in here, but coming into resistance. So, you know, we're going to be watching this closely. Some of the individual companies in there, like Micron, one that we've been watching. We've been looking for a breakout of this base that it's been in. You know, it kind of faked out to the downside here, 2 weeks ago, right? And then had really nice reversal. It came up, it consolidated right under resistance. So see this price action, right? This is what I've been talking about. We consolidate under resistance and then we break out to the upside. It had a strong breakout to the upside. Volume is not too bad. You know, at least it was higher than the previous few days. Would have liked to have seen more volume on this. Really need to see this continue though. We need another big day up and then maybe go sideways, you know, a little bit sideways for a few days as it comes into some of this resistance here. So that was Micron. PI. Impinj is one that we have been watching closely as well. Hopefully some of you guys are playing this one because it's, you know, it's behaving really nicely. Now, last thing we were looking at was this bull flag, and we had a target on the bull flag up and around here. Well, we've drawn another bull flag, and it looks like we're breaking out of that on Friday. However, we're breaking out right under resistance. So this 68 level is really important to watch. If it can get through there and hold on Monday, we could see a really big move in here, up to probably up into the 80 area. So it feels really risky. I'm just not sure about the risk reward on this play though. I think that if you didn't get the breakout here on Friday, you're going to be getting in too high for my liking. But you know, maybe it suits your risk tolerance playing that. Only you can decide that. What else we got? Healthcare. So healthcare is, you know, after this nasty move down here, it came right back up. That's very healthy. It's going sideways, consolidating. Couple of nice days here, or big, you know, big gap up and continue higher on Friday. That's really nice to see. But again, obviously, some resistance overhead. I think this needs to continue sideways a little bit more, or maybe if we have another big day, then we can kind of go sideways a little bit, maybe stay up in this area. That would be really nice. But this looks like more sideways kind of in this range, a wide range. But hopefully that range starts stepping up. And I didn't really see any not a lot of individual healthcare stocks that I liked. Oh, actually, there's one that I forgot to look at. Actually, two perhaps. You know what? I'm going to add these onto my list here at the bottom of the show. INMD, I think it was, and HINs. We'll do those. We'll do those on the fly. Because I forgot to look at that. I think they might be good. So biotech. Biotech has some pretty decent action. We had a bull flag. We were watching the breakout of this bull flag. Now that bull flag, I think it was targeting in around this 96 area. We were drawing another bull flag. This is a totally playable bull flag. This is really nice price action here, right? So if you missed the first one, if you missed this first breakout, you know, it's giving you another chance, because I still think that we can target 96. And, you know, the breakout's going to happen right here in around 83. So 83 to 96, that's a nice move. You can make money on that. This is a play I'm definitely going to be watching. Along the same lines is the ARKG, the ARK Genomics ETF. Now, we had mentioned this last week. We talked about how this, you know, this is a nice base, and we had this sort of fake out to the downside, very constructive price action coming out of there. We didn't go up as high as I thought we might. We kind of had, you know, sort of fake outs in this range right here, but I like this price action in here. You know, we really need to kind of zoom in closely here on this. So you can see as we zoom in, You can see that we're drawing a bull flag now. Now you can, you want to pay attention to these two lows down here. You could maybe draw the bottom of the flag as here with a couple of, wicks down, right? Now, if you're going to play this, depending on your risk tolerance, ideally you've got to stop below these two lows, and which is also below the rising 21-day moving average. That's if you're, you want to be down here if you're trying to get in this and hold this for a big move, which I think is possible in this, right? It's ARKG. If this gets going, it could really go. There isn't a lot of short interest in this, which is interesting. 119,000 on 74 million. That's not a lot of, that's really light on the short interest. I wonder if that number is wrong. I would have expected the short interest in this to be higher. But maybe they've been covering in here. Anyway, so you could play, I think the best entry on this is above Thursday's high. You could play above Friday's high if you want to. You could wait and play until it breaks out of this, this little downtrend line. So, that would be, you could wait, until it's out above Wednesday's high. It's really up to you. But somewhere in this area, somewhere between here and here is your entry for the breakout. And like I said, a stop down here, although you could, if you're more willing to get stopped out, you could bring this up tighter. I probably wouldn't want to be any tighter than this here at around 35, but you can move it up fairly quickly, because if this is going to break out and go, it should go pretty quick, and so you can start tweaking your stop up as it's running up. So that's how I would play that. Again, this is not investment advice. This is for educational purposes, and you're going to be trading at your own risk, of course. All right, so that's the ARKG. And there were some plays in here as well in this space. One that we've been watching is NTLA. Caught some of this, the breakout from this flag here. And now we're flagging again. We've got this nice sideways consolidation going on. Very similar play to the ARKG, right? Play it either above Friday's high or above Wednesday and Thursday's high there. I think a stop, I think if it's breaking out here, I think a stop below Thursday's low is good. If you want to take a little more risk, you could go below Friday's, or you could go below the entire consolidation. Just depends how much risk you want to take, and of course you size your position accordingly, right? If your stop is nice and tight in here, you can buy more shares. If your stop is going to be wide, you're not buying as many. This is targeting up here in around 76. So, there's about an $11 move in that in there, which is, pretty decent sized move. I'll be happy with that. Okay, REITs, just kind of chopping around, meandering around, looking fine there in the REITs department. Nothing major going on. Staples, I think kind of the same thing. After this big down move, now consolidating sideways, and that's perfectly fine. Utilities, they're, pulling back a little bit, but, it had this massive down move and a big recovery. It needs to go sideways for a while. Here's our home builders. So you can see these home builders are consolidating nicely here. Put in a nice bull flag. They put in a bull flag, kind of a bit of a messy or deep bull flag right here. I'll just draw that in case you can't see that. But, right in there, you got a flag broke out of that. Now we're consolidating again. A breakout of here could certainly come up to this 63 level. I think rather than playing the ETF on the home builders, individual home builders themselves are the way to go. But don't forget, though, we've got a lot of, beginning of the week, a lot of macro data for the home builders sector. So a couple of the individual names we've been watching in here. One of them is this Toll Brothers. I'm a little annoyed with this one because this just keeps chopping around. But you know, if you're going to play the breakout, you know, you're probably playing a breakout of 49-ish with a stop, you know, below 40, below Friday's low or these two lows here. Yeah, this just needs to get up and go, basically. KBH. I think KBH may actually be a better play, except that we usually don't want to see a bear flag that's rising, right? You don't want to see a flag that points in the direction of the trend that led into the flag. Okay, so for instance, this bear flag here, you know, we were in a downtrend, the bear flag goes up. That's normally what you see with a bear flag, and that it did eventually resolve to the downside, although it first kind of resolved mostly going sideways. But yeah, so these upward pointing bear flags have a tendency, or bull flags, I should say, sorry, have a tendency to fail. So we want to be careful in that. So a couple of the names we were looking at last time, and these are some of the ones that failed. You know, we were looking for these to break out to the upside. They didn't do that. They failed. They went to the downside. But, you know, if you had entered and if you had, you know, tight risk control, you would have been out long before, you know, this move got big. Now, in Palantir, we have the makings of a reversal candle here. It is a reversal candle, but we need to see another one. We need to see some follow through. But I think it's worth keeping an eye on because this may set up again soon, especially if we get, you know, another good candle on this on Monday. Zoom. We were looking at this one for a breakout to the upside as well. This looked like it was sort of primed to go after, you know, so we had this upward wedge. We expected that to break out to the downside, but it recovered really nicely. And that's why I thought once we consolidated in here nice and tight, that's why I thought we were breakout to the upside, you know, because they say from failed move comes fast moves. You know, the bearish play off of this wedge definitely failed at first. But now it has failed. This failed to break out higher. It came down pretty hard, but now it's supporting here, and we got a little bit of a reversal candle here on Friday. This probably needs more time going sideways, yeah, you can watch this for a play if it starts to turn up, but I'm not too thrilled about Zoom. Okay, so some new plays here. ARKK. I was a little reluctant to put this in here to bring up this ARK stuff. I mean, 2 of them in 1 week. This is a nice looking setup, right? We've got this series of higher lows. Now we haven't made any higher highs just yet, but you know, we've got an ascending triangle here. Now a lot of people will expect this to break out to the downside. If this breaks to the upside, it's going to go fast. So I think that what we want to see happen is a couple of sideways days, take a little rest once we get up to this resistance, and then buy that breakout. You know, because this probably goes quick, but be aware of this resistance at 52 with that 100-day moving average there. Once we're through that, you know, I think it's like clear sailing up and, you know, coming into the $70 area. So really good risk reward here in my opinion. On this play. And you could, I mean, look at, we've got a little bit of a hammer here. It had decent volume. That red day before it, lower volume than the green days. You could even front run this in here if you wanted to and just buy the open on Monday if it's going up, or even better on Monday if we had you know, if this opened red and then went red to green, that would be awesome. That would be a nice intraday buy to get an early start on this move. And that would set you up for really nice risk reward. If you do that, your stop is obviously below these 2 lows. Baba. So Baba is, you know, had some trouble with the Chinese government over during the week. I think it was on Thursday. Got a fine or something. Also China, you know, with the whole lockdown thing, there was new lockdowns or whatever. Macau, I think, got locked down. So it pulled off basically during the week is what I'm getting at. But we had a nice reversal candle here on Friday. decent volume, and right at the 50-day and 100-day moving averages. So really want to see some follow through on this. But if you want to be aggressive in here, you know, if we do start to see follow through, you could do an aggressive entry in here. This is a high risk entry though, but I think it's worth keeping an eye on if you like BABA. Louisiana Pacific is a building materials company that we previously looked at. We had looked at this pattern here, this downward sloping bear flag, and I remember mentioning to you guys, you know, when we see a bear flag that slopes down, we usually expect it to break to the upside, and sure enough it did. And now we have a bull flag, and the bull flag doesn't look too bad, although it's pretty wide, right? So our risk reward on this is not ideal, but you could buy a breakout above Friday's high with a stop below Friday's low, and you also get the advantage of you're being below the 21-day moving average as well, which seems to be turning up. So there might be a play in there for some people. Now, in mode, I think was this is interesting. This one, sorry I didn't take a closer look at this before the session. I meant to. So you can see this has been in a really long-term downtrend, and you know that downtrend is basically broken now, and we had that gap up. So let's get this gap in here. Okay. Now we've got earnings coming soon, so this is a little sketchy, a little close for my liking for playing this. Yeah, I think for now this one is just sort of a keep an eye on it. I think maybe some more sideways action in here. Yeah, I'm gonna be watching this, but I don't see a play in here right now, unless you're super aggressive. But maybe we can get an earnings play out of this. What's the short interest? Yeah, short interest, almost 10%. So this might be a play for the smarter YOLO that I did the session on Thursday. You can see that in the session recordings, and you can get an idea how this play would set up. So yeah, we'll keep an eye on that in the next week or so. HIMS is another one. Jerry mentioned that I should look at this for a play, and yeah, this is a nice looking consolidation in here, isn't it? Nice stair stepping up, you know, higher lows, higher highs, kind of right at resistance here though. And that resistance is fairly important. Somewhere, well, it's kind of like, it's weird. See, the resistance level is right there, and it keeps poking above it and then pulling back in, right? When this breaks through, or if this breaks through, it's probably going to move quite nicely. We've got the 675 level here. So where are we at here? 550 to 675. That's good. And then if you get through the 675, it's going to be one right there at around $8. You want to watch out for the $8. Right about there, or this one up here, I think. Yeah. Oops. Try that again. There we go. All right. Yeah, I could see this. I could see this definitely breaking out to the upside and making a fast move. As far as your risk, you're probably risking down below these three lows right here, or you could risk below Friday's low. This could be a nice play if it goes. Yeah, I like the look of that. Now the downside here is that this, since the May low, it's doubled. So, you know, we should have been in right there. Would have been a beautiful entry. We have some good lessons in this one. You know, after it put in this reversal candle here, right after earnings, you see that it comes down. You've got total capitulation right here. Pops back up, beautiful reversal candle. Comes up, consolidates, and then breaks out of that consolidation right here. There's your entry right there. That's the smart pro entry. And that's, you know, right in around 368. You kind of would have had another similar entry here when it finally broke through this 50-day moving average. That would have been a good entry as well. Another very similar entry right here. Man, they're all over the place in this. How come we weren't on top of this one? Hey crew, we gotta keep eyes on this. And I know that we've been talking about HIMS in the Discord because it's one of Nick's favorites. You know, we should have been all over this. We've dropped the ball on this one, guys. So, okay, are we late up here? Yeah, for sure we're late. Can it keep going? Absolutely. You know, it's just the risk reward down here was way better than the risk reward up here. But I still like this play. And thanks to Jerry for pointing this out. And you know, if maybe he can tell us if he's got any more info about it, if he's got any more fundamental info, or if there's any news or anything that he knows, maybe you can let us know in the chat, Jerry. But at least let's keep an eye on this thing, everybody, because this is one of the best plays that you know, that we've looked at today. All right, I think that is it. That is it. Let's take a look at what we got coming up here. Got a couple of little announcements to make. So, Ticker Talk this coming Thursday. Next weekend, I'm traveling. Taking just a little bit of a break. Taking a few days off, so I won't be able to do a market briefing video next weekend. But I will in the Monday morning briefing. I'll try and do a little bit of an expanded briefing and talk about some of the things that are coming up for the week. So that's it. Hope everybody's had a great weekend, and I hope you have a good Monday. And as I'm recording this, I see that the futures market has just opened and gapped up a little bit. Why don't we take a look at that live right here. So this is the S&P 500 futures, and you can barely see it right here because we just opened, but there is a tiny little gap right there, right here where I've got the cursor. That's where it's opened, and all of the indices are green. The Qs have actually gapped up more than the others, so that's good. So far the overnight session is off to a good start, so that's nice to see. All right, that's it for me, everybody. Enjoy your night, and let's go out and have a good week.